Good morning, my fellow crypto trading brothers and sisters. Today is Monday, May 9th, approximately almost 12 p.m. Eastern Standard Time. I apologize for this late update this morning. I've had all sorts of technical difficulties, from the mic not working to the browser not recording video on TradingView. I've had to restart my computer, and of course I'm using a Linux operating system, which is open source, so I have to tweak and do all sorts of things to make this whole production work. Anyways, we've got a lot to cover, guys. Bitcoin is still crashing hard and traveling deeper and deeper into that bear territory. So the big question is, do we panic yet? And I want to cover some levels and talk about trade strategy if you're long, if you're short, if you're holding, all those types of things. Let's jump into the charts, guys, and we'll get started. So I've got some notes here, and I apologize if I appear to be a little bit scattered today. It's because I am scattered. Like I said, Monday has been very much a Monday. Everything going wrong. I tried to make note of some things here because I did start a few videos, and I can't remember what I mentioned in the previous video versus what I'm saying at the moment. But let's talk first of all about recent price action, what has occurred, and what I think will continue to occur, and how you can trade this, all right? Because that's the most important. Some of you, like me, got caught off guard, all right? We had this sort of looked like a bullish wedge, right? And then on Wednesday at 2:30 Eastern Standard Time, Jay Powell and the Fed stated that they were raising it 50 base the interest rate here in the U.S. 50 basis points, and the market kind of breathed a sigh of collective relief, knowing that we weren't going to up 75 basis points, and that trajected us upwards over this black ascending trend line, as well as 39,300 support, or was then resistance. All right, now that area of confluence became good support, and I thought at that point that we were going to rely on that ascending trend line as well as the support to kind of keep us in this yellow area. So even though I stated here on the chart 50 basis points this time and the next one 25 basis points, we go in the yellow, I thought, well, maybe we could stay in the yellow because the market was relieved that we didn't do the 75 basis points rate hike. However, as the market kind of digested that release statement, that press release, and we found that the Fed is planning to raise it 2 more times at 50 basis points, that kind of weighed heavily on the markets. I personally doubt that that's going to happen, that we will get 2 more interest rate hikes of 50 basis points. I think that Jay Powell and company will determine at least the very last one to go lighter, 25 basis points. But anyways, the market is relying on what Jay Powell says, and it doesn't matter what I think, it matters what the market thinks. The market thinks right now that Jay Powell and company are going to continue this 50 basis point rate hike over the next 2 sessions. So they are pricing in aggressively, and they are pricing in early these rate hikes, and that's why we're seeing all of this selling pressure take place. Additionally, there are other markets, and I have these, I have my Telegram paid subscribers group, and I have people from all around the world, people from, Australia and London and all over the place. But anyways, it was mentioned in there that their rates were also increased, all right, not to the extent that we were. They went 25 basis points, we went 50. But that was unanticipated. So because Bitcoin is a global market, we have to take those other areas, Germany, Australia, London, those rate hikes, we have to take those into account as well, and how they weigh onto the Bitcoin price. It's not just all about the US, guys. This is a global market. Okay, so we have some levels here, and it looks like we're currently breaking a level I have drawn here at around 33,000. Let's go look at where these levels come from. We have to really zoom out here on this chart to see where these levels come from. I'm going to put it in auto, and we have this level here. I believe we've got some pivot points. You can't necessarily see it at this zoom level, but that's where that 33,000 comes from. That is, in some of these levels I draw not knowing how significant they'll be until I see when the candle meets that level, right? So 33,000 looks like we're just going to blow right through that, and that could be the case. But it could be that the buyers come in and take us back above that 33,000 level by the end of the day today, by the close of this candle today. Another one I have drawn here is kind of a descending trend line, although it's very slight. But you can see I started this over here at some body pivot lows. All right, and then we used it as support along the way, and that line continues to decline. At some point in the future, it will meet the green 30,000 mark. Now we keep hearing a lot of people talk about this 30,000 mark. Where does that come from? That comes all the way over here in January of 21 when we broke above it, and then we used it again in the end of January as support. We've touched it several times with some of these wick downs. We've just come down and touched it and bounced off of it, and we've bounced off of it big, proving that it is significant and the market respects it. So that $30,000 mark is going to be psychologically significant, at least as support. I want you to notice as well this RSI. I'm going to pull this up here real quick. The RSI broke our level of support, and after that massive selling ensued, we are now deep into oversold territory. Now, that doesn't mean we're going to bounce immediately. Bitcoin can spend some time down here, like with, the next couple days or so. Could spend up to a week down here in oversold territory. But at some point, look to have some relief from this oversold territory. All right, we need to pay attention to the RSI as well and what it's telling us. All right, let me draw this back down. Next, I want to jump over to a cleaner chart here, and we'll take a look at what I drew on Friday. We got to zoom out to the weekly, and you can see this ascending trend line. That comes, I just drew that really quickly on Friday's video, and I wanted to point out this M pattern that is currently playing out. Now, I said if we drop below this, that price was currently 36,000. Keep that number in mind. That's significant as well, guys. I said if we drop below it, we need to confirm on the weekly. All right, so we had one candle, if I zoom in here, closed below that level, that $36,000 level. Now we have another candle that has opened and is currently selling below this line. All right, so we need I believe another 4 candles. Let me zoom out here. I think it's another 4 or 5 candles. When do these weeklies open? May 9th. Oh, so we need another 6 candles down here in this territory below 36,000 to confirm any move down. All right, so this weekly candle has to close below 36,000 to confirm this bearish move down. Now, I have another line here which we're currently resting on. All right, where does that come from? So some people might draw, let me get rid of this. There we go. Some people may draw the neckline of their M pattern down here. Why? Because it intersects with these body lows, and then you have a wick which almost reaches down and touches it, and currently we're resting on that. So that is another way that the market may use this area right now, which we're sitting on at 32,000 as psychological support. If we break that, we definitely do come down to the 30,000 mark, in my opinion. All right. And below that, I want you to take note of one more thing here. See this red line? That is our 200 candle weekly moving average. We have never in Bitcoin history broken below and confirmed. And confirmed is key, all right? Because you can see over here, way back here in March of 2020, we did break below, but we did not confirm. Those are just wick downs, all right? The body of that candle came back above that 200 weekly moving average, and so we have never broken below and confirmed. Keep that in mind, because I believe if we break this 30,000 support, that is big psychological support right now. And if that gets broken, panic selling will ensue, and I believe we capitulate all the way down to that 200 weekly moving average. I wouldn't be surprised at all if we get a candle that goes down there and touches that. All right, So that is very important, and that weekly candle is right now at 21,850 and ascending. One more thing I want to show you on this chart, zooming back into the daily, I want to show you I drew an fib retracement from our wick high on Wednesday to our current price low right now. Actually, I got to draw this down even further because we are lower than this now. All right, wick low. All right, and interestingly enough, what is that price? I got to zoom in here to see what our 50% is. Looks like it is 36,000. We've heard that number before, have we not? And we're going to hear it one more time. So 36,000 is 50% fib retracement. That's a common retracement level. In other words, when we do bounce and we come back up, and that most likely will happen. I don't think we're just going to go to zero and kill Bitcoin, right? So when we bounce and come back up, 36,000 is 50% retracement along with my trend line, my neckline that I drew on Friday. Right there, intersects at 36,000. While we're on the 36,000 number, all right, let's jump over to BTC. What is this? This is Bitcoin CMA futures. Why am I showing you this? I like to keep this up on my charts as well, because what happens with CMA futures is they close and then they open, all right? And then you get these nice little gaps, all right? Traders know that over 90% of the time, I forgot what exactly the number is, maybe 93% of the time, gaps are always filled. In fact, there are some traders that they strategically, all they do is they trade gaps, all right? And they're very successful and profitable. We have a gap fill here at 36,000, meaning that at some point in the future, the market would like to come up and fill this gap, all right? That's right at 36,000 again. So we have three areas there at 36,000 that are very significant. And I believe when we do get a jump up in price, we will most likely at least go to 36,000. All right. I'd like to see us personally, I'd like to see us close above 36,000 because that will close above that neckline on the weekly and invalidate any move down. All right. So likely, if we do, we would have capitulated at that point if we close back above this 36,000. And we need to confirm that move as well on the weekly. All right. Okay, we're 13 minutes into this thing. What else do I want to show you? Well, I have here noted that bulls will most likely not panic sell unless we get below that 30,000. What are you guys? Let me just ask you a question. What are the whales doing right now? They're buying, right? Every time you look on, if you follow Michael Saylor's tweets on Twitter, he's buying Bitcoin. He's buying down. He's dollar cost averaging in. This is also my strategy. I don't know if I've already mentioned this. I apologize if I have, because I made 3 of these videos already, or this is my 3rd video. And I probably am repeating myself here on some points. But when I get caught off guard like this with this move up, this was a big head fake, and I thought we were going into more bullish territory than even I anticipated, and then the selling just ensued. When I get caught off guard like this and I'm long, I turn into a hodler, and I've done just fine with that strategy. Now, some of you don't have the guts to hodl, all right? So you're looking to sell. Where do you want to sell? What I would recommend is waiting for a bounce back, a retracement, like we just covered on our previous chart, up to one of those levels, maybe even 36,000, and then you start to unload your coin if that's what you're looking to do. Personally, I'm not a bear yet. All right. I take my time and a lot of these things, and I don't mind holding. I hold a lot of good coins, so I don't mind holding for the long haul, because if I believe in blockchain technology and cryptocurrency as the technology of the future, and I do, then I know at some point it's going to go up again. Also, I've already resigned that when I've got into the market, I don't mind losing. For this type of technology to be successful, I'm willing to put what I've got in the market, risk that against this. So I become a long-term hodler at this point when I'm caught off guard. Now, those of you who want to sell, again, look for a bounce back up. And what you're looking to do is sell at the $36,000 level. We've got another level here at $37,550. And above that, we may come all the way back up to $39,300 or even test the underside of this ascending black trend line around $40,000. All right, that is a possibility. And we know from the volatility of Bitcoin price action, that's a very strong possibility. So that's where you'd look to offload your position if you don't like the gut-wrenching feel of this bear climate at this point. Okay, we are 16 minutes into this video. Let's jump over to our dollar chart. I probably have forgotten to mention a few things. If so, I will give you, depending on what happens on Wednesday, I may give you a midweek review or update. And then, of course, you can, whatever I forget, I'll make more notes and we'll do another video on Friday here. All right, the dollar is continuing to be strong. Had a bull flag here, broke to the upside, never tested the top side of this previous resistance. Bull flag here, broke to the upside, never tested the top side of this resistance. And now another bullish flag here, we have broken to the upside of. All right, does that make sense, guys? So again, we're not even giving the dollar a chance to come back down and test the top side of these resistance. The dollar just continues to grow stronger and stronger and stronger. Right now, we're at a level that we have not been at since 2016, 2017. Looks like the dollar wants to continue up and tag this descending black trend line, which happens to have not been touched since 2001. Over 20 years, guys. We have not touched this level. But that looks like what's happening. And why is the dollar getting so strong? Because the Fed continues to put deflationary pressures on the market. All right. And by raising interest rates, you are essentially increasing the strength of the dollar. All right. And when the dollar is strong and the VIX is strong, right now it's up 12%. And when the dollar is so strong and the VIX is also spiking, again, this line right here is significant, 37.85. We're almost there. That's very significant. I believe that's where the market takes a little bit of a rest. So that would also coincide with the Bitcoin price action, right? If we capitulate or if we drop down to 30,000, that's right around this level here. Anyways, when the dollar and the VIX are both up so significantly, there's no way in hell that the markets are going to be up as well. And that's just not going to happen. And Bitcoin, of course, exaggerates whatever our broader markets are doing because there is institutions in this space now, right? And so they're all trying to make a buck as well on trading this stuff. Okay, so that about covers it. Reminder that, okay, so we have that CMA futures gap at 36,000. I hope you guys are taking notes on this if you're looking to get out or if you're looking to go short, whatever your strategy is. These are all important levels. You've got to take note of these. You've got to draw them, map them in on your chart. Try to remember to share this chart in the links as well so you have access to this. Take a screenshot if you want of this video and map out these levels. These are very important levels. All right, let's do our closeout here. Bitcoin is now firmly in bear territory. There's no question about that. However, if you map these levels and price movements correctly, you can avoid making costly mistakes that you might regret in the future. And that's why it's important to have patience, map these levels out, set your strategy up. Are you looking to sell out of this market? Are you looking to buy more? Are you looking to go short? It doesn't matter. These levels are all important. They're psychological barriers, and they are areas that the market will respect. All right, mapping BTC alone from a technical analysis standpoint is important, but it's not comprehensive enough in terms of your data set. So we must always look to the broader markets, geopolitical events, the war in Ukraine, and other macroeconomically influential factors. That being said, CPI data will be released Wednesday morning at 8:30 a.m. Eastern Standard Time. We got to watch this closely, guys. All right, until the next video, I'm out of here. Peace, y'all.